Hello everyone, this is Nick Perry at Schaeffer's Investment Research with your chart slideshow for Thursday, April 5th. Today I am back with my weekly check of the broad market indices. In last week's chart slideshow, we saw that the broad market indices had pulled back to the first layer of short-term support. On the SPX, I said that this level right near 1400 was what I would be watching this week. If we saw a breakdown, it was the secondary support is what I would be concerned if we had a breakdown. But primarily it was how the indices held at this first layer of short-term support. You had the SPX there, the diamonds there, the comp. Wow, it really screwed up that line. Anyway, the comp right there. And the rut kind of trading slightly different, but kind of trading around support. So let's take a look at this week's charts. And here we see a rally off support. Basically, there's that support for the SPX. Last week's lows pretty much marked to the end of it, and we see a bounce right off of that. And actually, as we head into Friday or Thursday afternoon, I keep thinking it's Friday because of the long weekend. We've got the SPX sort of pushing above last week's peak right there. When we look at the Dow and the comp, we see again a similar pattern. Short-term support there, bounce, pushing above the recent peaks. Support, bounce, pushing above the recent peaks. And while the rut has been trading a slightly different pattern overall than the other indices, the same basic concept still holds. We had the pullback to near-term support. In this case, it primarily comes from the zone, this trading range consolidation that was in the latter part of 2006, and basically pull back to it, and we've got the bounce off of it. So, in a nutshell, what we're left with here is a situation. We'll look at the SPX. As we've been discussing, we had this quick sell-off that generated a decent amount of fear, a little bit of consolidation. We get the rally up, the pullback, and now we're starting to bounce out of that again. Last week I sort of talked about how the action fit with what you would expect to see when you think about things in terms of just an emotional level, what people feel and how they act, and this continues to follow along with that. So, as I've been saying, even though we've had this sell-off, the overall action still looks constructive. These charts, at least in my mind, still seem to support that. As far as what I'll be looking at in the coming week, it doesn't really change a whole lot. Basically, this level of support is still what I'll be keeping an eye on. I mean, we've rallied away from it. I wouldn't expect to see a pullback back to this, but it just depends on how much nervousness is still out there and how hesitant people are to jump back in. So we do have this as minor support, but we're so close to it that I wouldn't really call this a decisive breakout. So I'm not sure I would be looking, saying if we tick back below that, that's very significant. So if we do see a pullback back in this range, you'd like to see it hold above here since we've already held above that once. Ultimately, this peak here, wow, I really did a poor job of drawing a straight line. I'm going to give up. Is that, that peak, let me clear the chart off. Basically, this peak here, not much better, but anyway, this peak is what you're going to be looking for in terms of resistance. That's the more significant level. That was the recent high, so that of course is going to be in people's minds. If you look at the Dow, we've got almost the exact same pattern, and the same thing on the comp. The rut, slightly different pattern, but still the same basic concept. That peak is what we're going to be keeping an eye on, this short-term support, and a break below that is where I would start to get concerned. But we're not near that, and so you kind of have to flow with the situation. As it stands right now, my overall takeaway is that these charts look constructive as we head into this long weekend. So that wraps up my thoughts for this week. As always, stay tuned to the blog for further updates.